Good morning, guys. I'm going to preface this one with global flows is basically like an opera singer who is he went a little too ham. He went a little too hard, trying to provide too much value, and he's struggling on the vocal cords. So we're gonna try to limit his actual talking time today. We'll probably just do 45 minutes or an hour here. He's built out a very sick, very cool Hyperliquid funding rate dashboard that I think everybody is going to want. Okay, so if I'll say it now and I'll cover it later too, but you are going to want to be at least a free subscriber on capitalflowsresearch.com. If you are not, you won't have access to this. So go just sign up, capitalflowsresearch.com, become a free subscriber, or support what he's doing and become a paid subscriber. It has made everybody their money back plus a lot. So I'd highly suggest doing that. But yeah, everybody is going to be able to get this model for free after the stream. And just to remind everybody what we are doing here, we are showing up every day, 8:30 a.m. Mountain Standard Time. Raider Shile, throat ability or no throat ability. Now get your head out of the gutter, you disgusting men. And we're here to show up every day and map the macro regime, cross currency flows, what's happening in the markets you're trading, the markets we're trading, trying to foundationally price the cost of money and ultimately whittle that down to finding the most asymmetric bets in global macro. And if you've been around, you know some of the bets that we're in right now. And they're looking pretty good. So good morning to everybody. And we're going to dive in a little bit more to price action on the back half of this today as well, just so I could kind of cover some charts. We're going to go through a slide deck with some mindset stuff as well. And flows, I will hand it over to you, and you can talk as much or as little as you want. But please, guys, if you don't mind, I'm sorry. It's too good. It's too funny. Anyways, if you guys don't mind, please just head over to Twitter. I'm going to ask you every day to just please repost this. We want to get everybody joining these live streams. I think this is some of the most value. I've learned so much in the last month just by showing up every day. It's absolutely nuts. And I hope you guys have been too. If you have been learning anything, please put it in the comments. It's always nice to see that we're, spending our time wisely and providing value and hopefully helping people out. So please just go like it, or repost it, comment, whatever can help the engagement. And we'd really appreciate that. So Flows, let's introduce your voice to the people so that they could all chuckle in their own homes.
I sound like RFK Jr. right
now. Oh my God, it's bad. It is bad.
It's not good. We'll push through everything. I can still write reports though, so we'll see. But the the entire goal over the last 5 months has been really focused on how exactly we can take a very large asymmetric bet in the cycle. And Hyperliquid has been the center of that. And then PER has been the most tangible expression of that bet, because PER has a edge that in a regulatory structure that we laid out yesterday that ETFs fundamentally do not have. And so one of the things that we laid out yesterday on the stream was about how this idea of low-cost leverage is what can draw a lot of flows to the platform. If you are brand new and you're trying to understand the thesis and everything behind everything I've been laying out, go to the tweet that I shared recently where I talked about nothing has changed. I'm still long PER. We're up 180% from the lows when I was originally laying that out. And it's been my largest position, it's very rare that I really take really aggressive bets and say, I want to go all in on this one thing. And you get paid to hold that risk. If you are the beneficiary of holding risk, you deserve every penny that you risk. And you never want to let someone tear that down and diminish your ability to take risk. And so PER continues to be the vehicle I express this trade with. And in this tweet here, you can find this on my page. And I'll also put it in the comment section right here so you can go through it yourself. You need to go through this tweet and begin to understand the logic for why exactly you have Hyperliquid in the period of time we have it in right now. Why exactly everyone in crypto, I will just say this very clearly. Everyone in crypto fundamentally does not know how to think about Hyperliquid. I know it's a broad statement. Everyone's just talking about it because it's going up, or they're talking about it because they think about ETF flows. But if you ask people and say, how does the value proposition of Hyperliquid differentiates itself? Functionally, no one has a clue. And they're just chasing clout on the timeline. They're just buying at highs. And so the entire thing that you need to understand is that there is a really important value proposition here that frames why Hyperliquid can go to $350 this year. And that's my view. You can go back to yesterday's section and yesterday's video where we lay out the credit cycle dynamics, the bear market playbook, and the bet that we have right now on Hyperliquid. Fundamentally, my view and James' view and what we have been discussing is that if you actually look at the macro factors, the flows of capital in the system, there is a credit cycle melt up occurring right now. And the best bet within that, in my view, is Hyperliquid. And by extension, the best expression of that is PER. And so now what we want to do is we want to just say, all right, we have this view, but as you know, my entire goal is not just to provide you with the entire educational foundation, but also with a thesis, but not just that, but with all of the models and tools that you need to be able to execute in real time. And so the model that I've built breaks down Hyperliquid funding rates across every major HIP3 asset. In my view, over the next 4 to 6 months, the crypto volume on Hyperliquid will become so small that it won't even matter. And the main volume and market share will primarily be HIP3 and HIP4. And so when you go through all of these changes, this dashboard, it's all pretty self-explanatory, breaks down in orange here, the funding rate and the price action of ES. So how much you have to pay to get leverage on the S&P 500? What is the price that you're paying for margin? And as that changes, it shows you two things. One, positioning, and two, how much capital is flowing onto the Hyperliquid platform. Let me tell you that the largest players in the world want nothing more than to come onto Hyperliquid and take advantage of some of these really aggressive funding rates right now. You can see that there are some equity indices that have negative funding rates to an extreme right now, or you have some that have a positive funding rate to an extreme. This allows and is an indicative factor of how much opportunity there is for institutions to come on the platform and create arbitrages to provide more efficient leverage. When I see all of these and their changes, it tells me that there is significant opportunity for capital to come onto the platform and create more efficient leverage on one or the other side of a trade and arbit against an exchange. And the fact that we see these funding rates at these levels is in itself an indication that the real institutional capital has not migrated onto the platform yet. So this entire model, you can get all the data for it, all the code for it, and I'm going to be sending that out to everyone. Most people, they're not even sharing the code for all the models that they're building. You're going to get all the code for this. You can feed it into Claude code, and it'll just auto-populate it, and it'll show up like this in your browser. The nice thing about all of this, and this is the last thing I'll say, is that when you have Hyperliquid as an on-chain marketplace, the way data works is different because now you don't need to pay for data. You can just go to Hyperliquid, and it's going to fundamentally change how data even exists in the economy. Because if you can go to Hyperliquid to pull data instead of another platform that you have to pay for, that's going to push data costs down across everything. So operating on Hyperliquid is literally free. The code's free and all of the data is free. And so if you're here today, if you're a subscriber on the website, then you will get all the code for this and you'll be able to go through all of these changes. And later this week, when my voice comes back, we will be going through the specific inefficiencies. You can already see I added heat maps here for these changes, and you can see that there are imbalances that exist, and you can go through any of these factors here as well, that for all of the different assets on the platform, and you can understand all of the different changes that are taking place. So that's the model that is really going to connect all these moving parts together.
I think this pushes forward perps to just to such a amazing potential. And like we discussed a little bit privately. There's this big narrative going around about some of the large accounts on Hyperliquid, right? Everybody's probably, if you're within or around the ecosystem, you've probably heard of Loracle. This enigma of a guy who works at some London trading firm who has very large hype bags that have been staked for a long time. And he's built up this astronomically large notional short position. We were kind of running through, I was trying to kind of understand what the goal was for him and how he was kind of playing his cards here, as he has this very long spot bag, but he's building this large short position. And you kind of walked me through how he is likely kind of locking in his gains from a very good, very large sized hype trade. And because of that, there's this story where the people who aren't understanding that think he's just building a naked short, and they're like, hit his liquidation price or whatever. And you're going to see, I just think this is a good example of what you're going to start to see when it comes to how people think about huge accounts, huge hedges, liquidation zones, different incentives. Like there's going to be just more information than has ever really been available. You're still probably not going to know to an extent what people are trying to achieve. But if you're a futures trader or an options trader or whatever, you don't really ever know any information about accounts and how they're building positions, what their incentive is, why they're doing it, how they're cross collateralizing it with something or whatever. And all of this free information, as this builds up and as they get more and more money into the system, more and more positions built up, it's going to be really interesting to start, looking at these funding rates and all these big players a bit differently. So I think saving this dashboard, bookmarking it, building it out with the code for yourself, and just having it on your screen pretty much at all times is really cool, because you're getting to see the funding rates over time for any active thing on Hyperliquid, and seeing the rate of change. If you don't mind just scrolling down there again, just to show people, seeing the rate of change of these different assets on Hyperliquid is just going to be so amazing. And that's one of the reasons we're very bullish on perps, very bullish on Hyperliquid. And again, like I think to your point, if I put a tweet out there to Shoku, I was saying like I would love to just be able to move all of my trading to Hyperliquid. One, we need to get regulation for US participation. But it would be so nice for me to have my macro outlook, my macro portfolio just executable within the ecosystem. I could trade copper, I could trade oil, I could trade Bitcoin, I could trade a single stock, I could create a vault, I could trade prediction markets, I could do whatever the fuck I want on Hyperliquid, all with, housing all of finance there. And I'm super excited about it. I know a lot of people are excited about it. I don't know, by the way, if you showed up late, Vamo, but he already discussed Per a little bit. And guys, by the way, I'm going to post in the comments now. If you weren't here yesterday, we did an absolute marathon, almost 3 hours, and we discussed bear markets throughout history, where we're at now, what's likely to come. We did a huge segment on Hyperliquid and Per and kind of the, regurgitating the thesis there. And if you have any questions on that, I would highly suggest going and just watching that whole thing as you have some time today. Make sure you're all caught up, because as we push forward, it is going to be more and more important to be as dialed as absolute possible. Because again, I personally believe there's going to be a moment in the next, maybe it's this year, maybe it's next year, where you being locked in and dialed and ready to execute is going to either save you like an ass ton of money in your portfolio, or it's going to be something that changes your life and you're going to be able to take advantage of some of the volatility that I think is coming down the pipeline. Everybody has their opinions on that. We talked a little bit about passive flows and stuff and how it's over, I think it's at 55% now, are passive flows into the major indexes. If you guys haven't followed Mike Green's work before, he did an interesting article. You can have your opinion on Mike Green, but he does have some interesting stats when it comes to the passive vehicles. And that is that every year about 2 or 3% more passive flows come into make up more of the market share of all flows, right? So within 3 or 4 years, that number instead of 55% will be 65, 67, 68%. And based on his work and the what do you call it? The centralization of that flow into the top 10, 15 stocks, there's going to be this kind of situation that's unavoidable as everything becomes one trade, that it becomes reflexive to the downside. We discussed a little bit of that yesterday. Yeah, so maybe this is something flows could touch on another day. Two pretty different ecosystems here, one in the East, one in the hopefully West, and Binance is a centralized exchange. Pretty much the antithesis to what Hyperliquid is tried to build is what CZ is doing. Is there anything you want to add to any of that, Flows, before I jump over to a different segment?
No, I think Binance really represents the establishment in crypto that fundamentally can't be trusted. Even if they have a dominant role in the market, everyone knows that there is a lot of issues around Binance in general. And there is a reason why there are regulatory hurdles around Binance itself that have not been lifted. And so, I think that Binance and a lot of these other firms are recognizing that they really need to adapt to the times. I think that Coinbase is a very clear representative of that they need to adapt. They're integrating perps and things like that. I think that it's so important to remember that all of these guys are incentivized to make money. And, you know, I don't care how much of a purist Brian Armstrong is. Um, if he says, oh, we can make fees and create shareholder value and do new things by integrating these things, they're going to do it. And maybe that would have been unthinkable a couple of years ago. But I think it's just so important to look at incentives of people because the narratives around things always shift around the incentives and flows of capital as constraints in the system express itself. So I just think that's really important to remember.
Yeah, I think that's great. Alfie, do you think there's a chance of any negative beneficiary of Hyperliquid being regulated may work against this to slow things down? I mean, my opinion on this is like maybe, but I just think there's too much capital and interest that could drive this whole ecosystem forward with prediction and pre-IPO markets and spot stocks and vaults and perps and hedging and institutions coming in and becoming market makers and providing extra liquidity, and their lead is so big that and they have the policy team developed in DC that seems to be making waves to the point where the SEC is considering, changing things somewhat quickly. I'm going to just take the side of the bet to where it works out, but I think, ironically, Coinbase and Circle and whatever could be the kind of centralized incumbent hedge to that. So I think there's interesting plays you could make around that thesis if you think the broader, on-chain world is going to expand. You could kind of have exposure to many different things. Even Robinhood, right, is another example of that. So, yeah. Let's see here. Why can't ICE or NYSE offer these perpetuals? I think they're working on it. I mean, the CME is coming hard into this space. My buddy's been talking to some of the people at the CME. They're trying to come into prediction. I believe perps as well as being. I assume there's a lot of hurdles and stuff that comes with this, and that we will probably see. I mean, there's a bunch of ICE products that I used to trade that, again, I would love to see perpified, if you will. And, I don't know how long that's going to take, but by this time next year, I would assume a lot of the major players will be coming for this space. Hyperliquid platform is not available to US investors to use. You can buy the Hype token in various spots like Coinbase, I think Robinhood. So you could get exposure to the ETFs or PER, which is like what we have here, but you can't actually go on the platform and execute on perps itself, which is so stupid that somebody in Germany or somebody in France or whatever can come speculate on US stocks 24/7 with Oracle basically creating the weekend Oracle pricing, and we're sitting here within America where the stocks live and we can't participate. So I hope that changes soon. 24/7 markets seem to be coming, and we'll have to see how that progresses. I'll do one more question here, and then we'll move on to the mindset section. New here. Thanks for showing up, by the way. Could you explain to me what is HIP3, what is Trade XYZ, and its relation to Hype? Do you think this is what kind of would like the new? Yes. So Hyperliquid, in a sense, is a platform that people can build things on top of. Trade XYZ is one of those companies that spun up and built on top of the Hyperliquid infrastructure. And what they've been doing is bringing real world assets like stocks to and commodities, I guess, and currencies at this point. And they're running it on the Hyperliquid rails, and they're basically becoming a very popular mechanism for people to come and price these things 24/7. You see that on the weekends. It was first with silver and gold and oil over the weekend with the war. SpaceX IPO stock is gaining volume, and that'll probably get even bigger over the next few weeks as we lead into the IPO. It'll be really interesting to see where that plays out. So Trade XYZ is building on, like, HIP-3 is the infrastructure that they're using on Hyperliquid. HIP-4 is like the prediction market infrastructure, if you want to call it that. So you're seeing, like, I think it's outcome markets are moving forward on there. And, I just think that's how you could frame it. That's how you could think about it. Right. And that's the general explanation as to what HIP-3 is. And Trade XYZ has such a massive lead in that it's really hard for even these other ones, like Ventuals already kind of gave up, at least these other HIP-3 builders. They're trying to fight for liquidity, but Trade XYZ has become kind of the token representative, and every ticker that they win at auction gives them more and more and more of a lead. So yeah, you could even try to build real world assets on Hyperliquid infrastructure. It's free for you to build on, but you're going to need to compete with things like Trade XYZ to fight for the liquidity, right? So if you go onto Hyperliquid, you drop down the HIP-3 box or the TradFi box, you'll see the little XYZ next to it, and you'll see that most of the open interest and volume is trading through them. And they have a great team. Shoku is the guy who started that, and he's pretty much one of the goats. Get that out of here. Okay, so I'm going to move on to just this interesting kind of topic that I've been thinking about recently. We'll let Flows not have to discuss anything anymore. So let me pull up. Whoops. Let me pull this up here. See if I can get it a little bigger. Bear with me here. I'm trying to fit this in our window. There we go. All right. So I was listening to Gavin Baker, I think it was, on the Patrick O'Shaughnessy podcast. Really good. If you want a bullish take on the AI space, I would highly suggest going and listening to anything Gavin Baker. He has a good way of, like, saying it with ease and saying it to where you're like, yeah, this all makes sense. Everything is going so much higher, right? But he brought up this idea of the iron triangle when it comes to chip manufacturing, and how in physics there's this problem, this like trilemma that shows up everywhere, right? And I thought what I like to do is take concepts that I find interesting and see if they can relate to trading. And I thought that this iron triangle theory, related to trading pretty well. So there's some simple examples out there in the world, right? The chip, which is what he was discussing, is like NVIDIA or AMD or Qualcomm or any of these chip makers. They can kind of pick two things that they can focus on, but the third one is always going to lack. So they could focus on, like, the heat, the speed, the power of the chip. And if they go for two of them, one gets left in the dust. So they could go for chip speed with a lot of power, but they could kind of burn out, right? They could overheat. They can't be as big. If they went for speed and thermal, right, they're going to lose power on the back end of it. So on and so forth. Building a bridge or a car or whatever, same idea, right? And Alfie, it'd be interesting to explain that sometime to us all as well. But like the build of a bridge, right? You could either build a high quality bridge and do it fast, but that ain't going to be cheap, right? Or you can do it cheap and fast, but it's not going to be good, right? Like you can kind of get the theme here. You've all heard of the blockchain trilemma probably at this point. Bitcoin is decentralized and it's very secure, but it's not scalable. You can't get a lot of transactions per second pushing through that thing, right? But you could have something like Solana or Sui, which is super scalable, and it's going to be maybe a bit more centralized. It could be scalable and secure, but it could be more centralized, run by a foundation. They could roll back things, and people might not like that, right? So you have that trilemma there. Ethereum, kind of same thing, a little bit more scalable, pretty secure, but more centralized. All right. So when it comes to trading, I was kind of trying to run through what I think. What is the trilemma of the trader, right? And what I've come to tell here is like you have your edge, right? Which is how much edge, like what's the expected outcome of your trade? Is it like a home run trade, right? That would be like a very high edge, right? Where the odds are tilted way in your favor. Frequency is just how much are you trading, right? What's the number of shots you're taking? And then risk capacity, like how much are you willing to kind of take on risk? Massive drawdowns, or do you want to limit and compress the ball, right? And if you notice, oops, I'll clear this here. If you notice, when you drag towards either one of these, it's going to change the outcome in one of the other directions, right? You can't have all three, right? So if you want, a lot of frequency and you want to control your risk, well, if you're going to trade all day, every day, and you want to limit your downside, your upside's probably going to be pretty limited, right? And you can kind of see how, as you move towards that, it's going to change the factor for everyone. And we'll dive in a little bit more to that. So this is the lie, right? Is that you could do it all, right? You could have all three. You're going to have big edge. You're going to trade all day, and you're going to have like no risk. It's going to be really easy for you to just crush it. And it feels like some of those people exist out there. And sure, maybe somebody has figured that out. But in reality, you're going to have to pick two over the other. And I think this goes back to, my trading archetype, trading mindset, or like your personality, figuring out which of these kind of sits best with you, because it's impossible, it's a lie to think that you could have this perfectly balanced thing of edge, frequency, and risk. All right. So here again, if every pair that you can kind of create here, it's going to starve the other one. So if you want to have more edge and more frequency, your risk capacity is going to collapse. Like if you're taking big bets and you're doing it often, there's a very large chance of blowing up. You want control your risk, high frequency. Again, your edge per trade thins out. And if you want edge and risk capacity, you'll keep the big edge, you'll keep it sharp, you'll keep the downside protected, but your frequency is going to drop hard, right? Those very clear large bets don't come along too often. If you're going to try to push all three of these together, it's where you're going to overload. This is where the blowups happen, the bleeding happens, the choppiness happens, and over time, this law is going to prevail, and you're eventually going to fail. So we have three different ways you could approach this, right? You need to surrender one of those corners, right? Sit back and reflect and think, what is the thing that sits best with me? What do I want to give up, right? And we'll talk a little bit about these three options here for you. You want to be a sniper? You want to be more mechanic? You want to be a machine? Or do you want to be a gambler? Some people want to be a gambler, by the way, right? And that's okay. So the sniper is going to be the guy that wants edge and to create, asymmetric bets, if you're talking about. And this is kind of where we live here at Global Flows, right? We want to find massive edge, and we want to do it to where we could take big risk, but with limited downside. We want to get on sides, and we want to let that asymmetry work for us so we could compound huge gains over time. Now, what's that going to prevent? We're not going to find that too often, right? So you're going to have to become a little bit more patient, pick your spots, and be okay with that. Some of you are more like the machine, where you want to be taking a risk all the time. Maybe you've found a systematic strategy that works well for you. These are the people who are doing big frequency, limited downside, but maybe they're playing small ball, 2-to-1, 3-to-1. It's working out, they're back testing, and it's like going to work 60% of the time. And they just run that over and over and over and over and over, a million trades. They retire, they move to the south part of Connecticut, and they make fun of all of us, right? That could be you too. And then you have the gambler, which again, you're giving up the potential of safety, maybe you could call it, and your risk could be ultimately losing everything. But these are the guys that when they run hot, right? It seems like they never lose. That's the gambler. They're going to push their edge. They're going to do it often. And when it works, and it looks pretty great. So I just wanted to kind of end with like, think about that for today, right? Think about that in the bets that we talk about, the PERS, the oracles, whatever it is, and think like, how does that fit into what your two strengths are in this trilemma, right? So I hope that is a cool think piece for you guys, and I'm going to keep doing these. I really like thinking through these. I stack these on top of each other and add it into my arsenal of mindset and psychology. And let me know if you guys think you're a sniper, a machine, or a gambler. Drop one in the comments. I'd like to know what most people lean towards. I guess would be a sniper if I had to really guess here, but we'll see. Let me pull up, and I think Flows is just going to take it easy for the rest of the day. Let me pull up charts, and we can go over a little bit of price action. Everybody likes a little price action. All right. Make this a little bigger for you. Yeah. Sniper. I think there's a lot of snipers out there. Cover a little price action here for you guys. Like, this one, I've been really liking the outcome of what we've been talking about over these past few weeks of streams, because you're starting to see the arc, the story that we talked about, right? I mean, during these times when everybody was kind of discussing contraction or expansion of liquidity, you had all of the back and forth with the war. And it's really difficult to paint a bullish picture at this moment, right? And if you're in crypto, this was the max fear for a lot of people. They're going back to the tariff tantrum, right, in 2025. They're, calling for big numbers to the downside. And we have just had one of the most legendary runs that we've seen in the stock market. And what's crazy to me is that you almost should have expected it. Look what has happened during most of these V-shaped recoveries. We get these same looks, right? Like, look at this. Whoop, whoop, whoop. It's almost becoming, the norm, right? So I'm actually not surprised to see this. And to be honest, it just seems like a lockout trade to where I could just see it going higher. I mean, I think we have some catalysts too that still help with running into IPOs, the war officially ending, whatever push that Warsh is going to make and kind of set the mindset moving forward towards forward guidance on interest rates heading into the midterms. I just think there's a lot more pent up bullishness. That's just personally for me, and we'll see what happens with flows and kind of like real rates, how they move forward as well, and to see if this kind of credit cycle expansion continues in the way we see it. So for now, when it comes to like the positions you're in, the days are up, the days are down, but we look back every week and somehow we're a little bit higher, which is pretty crazy. I'm not going to lie. It is like a historic move, right? What are we up from the lows in the S&P? From the lows to the highs now, we're up almost 20% over 43 days. I mean, guys, that's pretty impressive. Now, if you want to get into the nitty gritty and talk about volatility is pretty suppressed. Vol is pretty suppressed. Move index was spiking a little bit. Doesn't look too concerning. Like, you could argue that we're probably a little overzealous over our skis in a lot of places. We'll have to see how that kind of, progresses throughout time. Again, in a lockout trade, there are many times that you think we're just too exhausted. You could name any RSIs and Bollinger Bands or whatever you really look at. You could argue, hey, we need to cool off for a while. But in these types of trades, often it just keeps going. And we're in that period of time right now. Gold and silver have kind of based and started ranging. I'm not really sure what's going to happen here. It's something we've looked at getting long. Currently long silver, but I want to see a better reaction. Gold needs to kind of reclaim these areas, and silver, I want to see follow through here with this confluence. I like silver better than gold here, like when it just comes to simply looking at charts, which ultimately I still look at charts. I just don't rely on them. They aren't my, they're just like confirmation of a story that I'm building or not. James, what's your thesis on Bitcoin? Why are you buying it? And what is your downside? That's a long conversation for another day. Now, is Bitcoin being a trash boy and not doing anything for me? Sure. Really interesting like structure in Bitcoin and stuff though. For now, we're stuck in the middle of this range. We rejected at the 200 day, didn't get out of this channel. Now, there's some speculation on SBR stuff coming out. Again, midterms are coming up. Trump's not going to want to lose the support of crypto if he can't possibly. But at the same time, the market just might speak the loudest. And if we lose this range to the downside and we lose 65K, it's going to get really gnarly in there. And, if you want to talk downside for me, yeah, if we break 65K, I would probably reduce a lot of my exposure because I think it would get much worse before it got better. That's just me being in crypto for a long time. I'm kind of hoping we just trudge along here and break out of this and we go back and we melt everybody's faces off. But we'll see. Flo's vacating his vocal cords for the dedication of his asymmetric bet props. Yeah. Props to Flo's, man. Props to Flo's. All right. So we're seeing yields curl over just a little bit after, we're seeing the 2-year. I had these little funny Kevin Warshes saying, hey, I'm going to cap the upside here. But after the, peace deal talks and the idea of oil maybe dumping, I think that's where you might see, inflation expectations take a little bit of a breather. What'll be most interesting to see is how the long end reacts over time, right? Because we've really started pushing towards the upside of this like larger channel. And I think it's something like, this isn't what I expect to happen actually, just potential. But my general thesis here is we kind of whatever. I expect bonds to continue to be uninteresting. I do think bonds will be a really interesting thing to talk about as we start to see on the horizon, like the turn in real interest rates, when they might bottom, when nobody would ever invest in bonds again, when this whole euphoric phase could end. I do wonder if bonds could eventually be something really interesting, levered up and, playing out. Oops. Oil. Oil kind of stuck in this range. We did dump on the news, but we have kind of bid back up. NFA, I'm probably going to just reload my shorts again. Every time we've popped in oil, I'm just shorting again. Kind of betting on the end of this war. That's just my personal thing here. Feel better flows. Forex is an interesting one. I've dabbled in Forex, but I think they're some of the most they're the most real and the most fake markets at the same time. Like I traded a lot of order books in my day, and one of the ones I would stay away from generally was Forex markets because there just wasn't really much paper in there. And I really couldn't find an edge personally. And if you're new to trading, I always suggest finding more immature markets with more real paper to hone your craft. To just rely on charting Forex as somebody that's like a little bit newer, just getting into the space, again, you're just picking the hardest games to play. It's like somebody coming in and trading NASDAQ futures right off the rip. Like, bros, I'm sorry, but if you're new to this, you're facing the smartest, most resource-backed, fastest, lowest latency, experienced people to play against. And you think that you could come in and trade Forex to be a consistently profitable trader. I just think there's a lot of work for you to do before that. So get into something smaller, trade some energies, trade some ags, trade some perps, trade some crypto, trade some single stocks, some indexes, like get your feel for things, learn about yourself, face all of the demons that everybody has to face in trading before you go jump into the biggest, baddest boys. DAX is melting up. You want to go look at the DAX selfie? We could go do that. Hey, we're having a weird day. James is just going over price action, so mine as well. Get the FDAX futures. Yeah, I mean, we've discussed this on previous flows. This is something you've been pointing out as well, Effie. Like the DAX looks like it just wants much, much higher. And just another sign of the times. I mean, even this brings me back to the microcaps. Microcaps are making an all-time high. I mean, if we're going into a bear market and liquidity is contracting, like a lot of people say, it's like, why are the most microcap of companies just absolutely ripping to the upside? Single stock trading is underrated. Could be. Could be. I wouldn't choose 3 pairs out of the Forex market. Didn't you just hear what I said? Alfie, you make it sound easy. You make it sound easy. So let's see if there's anything else here to touch on, and then we can wrap it up for the day. Let's still look at some single stocks. I mean, if you go through the Mag 7, guys, like NVIDIA, I just assume like none of this to me looks bearish. You could say like, oh, it's breaking back below after earnings. Cool. Maybe you're right. Amazon right near all-time highs. Tesla working its way back up. Meta does look like it's struggling a little bit. Apple breaking out all-time highs. This was a chart that I was looking at and I was very interested in. Google near all-time highs. Oracle is something we've been looking at and talking about for a long time. This looks ready to make its next leg, especially if it can get over this 200-day moving average. I think Oracle will have an amazing move loaded up. Look at IGV here. It's up almost, I think, 30% from the lows after everybody thought IGV couldn't possibly ever go up again, something we've discussed. Qualcomm, this is my little baby trade right now. It does look like it wants that next leg. So if we could break out of this range in Qualcomm, I'll put it over this channel here. Just make sure I'm on the right thing here. Yeah. So, this is Qualcomm's market cap. Let me see what its market cap is right now. I just feel like it's $1 trillion company. Let's see what we're at. 263 billion. They have I think a really great story. I think a great CEO, a connection to the America-China relationship. This has moved quick and fast, but I do believe there's like astronomically more upside into here, and it's still a stock that a lot of people don't talk about. So we'll see where that plays out. Oh, and Per, if you guys haven't been looking, we are trading at a 1.1 MNAV multiple. We were up 18% earlier today, but it looks like stocks have been pulling back, dragging on Hyperliquid and most cryptos a little bit. And it is currently up, what is it up? 12.5% today. Okay, James Kid. My name is Jaymes, Zach. God, I mean, it's literally on the screen. Unbelievable. You want me to spell your name Z-A-C-K? Huh? When you have to sell winners to buy a better play, Tesla's been a winner, but I like Oracle Per and I want to allocate more, but we have to sell Tesla. Yeah, I think that comes down to just like, what are your true convictions? Is the price of Oracle and Per really swaying you, or do you truly believe it's a better thesis? What's your tax implications? Are you somebody who likes kind of a lot more volatility when it comes to Per? Do you have a better read on Tesla and kind of the robotics future moving forward? Is it going to merge with SpaceX? I think there's so much there that I would think it would take, a long reflection on what you truly want to do. Oracle and Per are much different. I mean, they're the same trade in a sense, but they're much different in volatility, what like positive or negative metrics might affect their price. Yeah. Thanks, bro. Thank you. Anyways, so yeah, I think that's just for you ultimately to decide. I'm gonna do a slide deck that I have made in the next couple of days on complete, ownership and taking responsibility for betting on yourself, making your way through this space. And I think that's just one of those questions where I can't be like, yeah, bro, switch over to Oracle and Per. Like, who am I to say that for you, right? And if I said that and then it didn't work out and Tesla ripped to all-time highs and you saw robo-taxis all over and Hyperliquid didn't get brought into the States and Larry Ellison's bet started not working out and IGV went down, there's a little bit of the blame game you can play there. And you could kind of say like, well, they were giving me more conviction about, no, that's all up to you, man. We could only provide like our takes, right? Like I like Tesla too. I think Tesla is like a massive opportunity as well. But you got to make that decision. So if there's any last tickers you guys want me to look at, I could do it now. Bitcoin miners and energy plays are bidding. The yen is still going to be something we're watching to the downside. I mean, this looks like it's ready to go. Really interested to see if the yen weakens and goes further as Japanese 10-year and 30-year keep going. I'm an MSTR fan. I won't get into that too much though. So yeah, you can see the meme stocks moving a little bit as well. Something to keep an eye on. That could at least give you a metric on how to think about froth and euphoria and all that. So, and Micron, yeah, Micron hit a $1 trillion today after Trump touted it over a rally this weekend. And again, like I'm not participating in Micron, right? Do I think it's going to do fine? Sure. Is it kind of building out and have this American exceptionalism played out, reshoring play? Sure. But you got to pick and choose your winners. And if you start chasing all the shiny objects just because you've missed a 400 or 500% run, just remember you have your own lane. You got to stick to it. Don't get caught up in the shiny objects. Oh, iron. Yeah, I'll check out iron real quick. I have a bag of iron. I really like it. I think as long as we're in a bullish stance for everything, I think this play makes a lot of sense to go make new highs within a month or two. Also, our boy Leopold Aschebreder has a bunch of it. It's a guy who's done pretty well, has a pretty good read on the markets. So I like this space. It's been kind of forgotten for a little while, and I expect to see some big moves in there pretty soon. Morpho. I'm not sure what Morpho is, honestly. Is this a crypto? Sounds like a crypto. Yeah, I don't know. Looks fine. There's a lot of cryptos that look like this, to be honest with you. A lot of long-term kind of they're reestablishing like these bullish trends. And it's up to you whether or not you have like some conviction to them, right? Like I like XPL, I like Lighter, I like Aerodrome, I like Zcash, I like Sol, I like Hype. There's so many of these things that I think are arguably good. But yeah, I mean, this looks fine. Coinbase lending tool. Yeah. If you want to bet on the bald man, it's probably good beta to like Coinbase. But honestly, like Coinbase is probably just like, I don't know, a better play in my eyes. Like, I don't hate just owning Coinbase here instead. Like, they're not going anywhere. They're a huge player. They're going to have their toes dipped in everything. They're the largest like custody, probably OTC desk, like everything. You could argue about them being like against the ethos of crypto, or it's too centralized, or it's the suits or whatever. I just think they're going to go make an all-time high at some point. So I would just rather hold that. So, all right, guys, thanks for showing up. It's a little different today. We're going to give Flows a little bit of a time to recover here. We'll be back tomorrow. We'll see if his voice is back or not. again, if you guys don't mind, go to capitalflowsresearch.com. Let me actually pull that up real quick. Sorry. All right, you can go to capitalflowsresearch.com. This is from yesterday, the long marathon session we did about different bear markets over time, manias, panics, and positioning. I've been putting out some, you can go to the free educational primer section and go through all of this information yourself. Unbelievable. But what I've been doing is each day I've been kind of going to like the bond market primer, interest rate primer. I put these into Claude. I create a slide deck that helps me kind of synthesize it, explain it better. And I've been posting those on X. But you could do the same thing. Literally just go to the bond market primer, copy paste the URL into Claude and say, make me a 10 to 15 page slide deck that explains what is being talked about here, or read through them yourselves. And please go become a free subscriber. The Hyperliquid model and code to be able to spin that up for yourself is going to be very important. So go get that. And yeah, hopefully you guys are showing up every day and finding these to be valuable. And Flows, I don't even know if you're still there. He's probably asleep, guys. But if so, you could say goodbye to your friends and fans. And I think
y'all send out the Hyperliquid model, this one, in a few hours. And if you want to get that, and then I'll have a full breakdown of everything else. It'll all be on the website. You get all the code and everything for free if you're a free subscriber on the website. And then I'll have something more for paid subscribers later today.
Heck yeah. Thanks for showing up, guys. Good luck out there. Keep your head on a swivel, and we will catch you guys on the next stream tomorrow at 8:30 Mountain Standard Time. See you later.